Tom, do you want to, the stage is yours. And I ask all panelists and moderator to turn on your camera while everyone else turn off your camera.
Cool.
The questions for the panels have been shared in the MEV.WTF agenda.
Great. I think we're all here. Do you want to do like a round of intros to start? Maybe Ivan, if you want to start.
Hi, I'm Ivan. And I've been doing MEV research for a while, and particularly front running. And then I'm advising Dragonfly Capital and building a mining DAO, which I think Tom mentioned in one of his previous slides.
I guess I'll take it from here. Hi, everyone. I'm Klarman, CEO and co-founder of Bloxroute. We've been working on the network layer of blockchains, which has a lot to do with DeFi and front running and pretty much get your transaction faster to pools. Also with my hat off, Backrun Me, which Tom mentioned earlier. And it's super cool to be here, kind of like here with Tom and Ivan and Joey. This is kind of like, whoa, all the friends stand together and kind of like, oh, let's do a panel together. Yaron, I know less, but like this is an opportunity.
Joey.
Hi, everyone. I'm Joey Zacherl, and I'm a founder at KeeperDAO, where we provide infrastructure for capturing and distributing MEV to users and keepers and a variety of others as well, with the goal of making DeFi more secure and profitable. And my background includes trading, market making, automation engineering, decentralized exchanges, and cybersecurity.
Hi, my name is Anton. I'm co-founder of 1inch. I'm also interested in discussing different blockchain-related things like consensuses of different projects, tokenomics, and of course, miner extraction value.
Yaron or Yaron? I'm sorry, I don't know how to pronounce your name.
Yeah, hi. Yeah, so I'm Yaron, founder of B Protocol, which shift miners profit to the users in lending platforms. Previously was CTO of Kyber Network, where we are doing a lot of on-chain market making. And previously, one of the founders of Smart Pool, which was the first decentralized mining pool on Ethereum.
Awesome. I'm glad everyone could get together. This is really like a stacked panel, so I'm glad you guys are all here. I guess, you know, we've sort of been talking a lot, I think, at the event about, you know, where does MEV come from? Who's taking it? What do you do as a protocol? And these are kind of around like, you know, MEV mitigation techniques and things like that. But I think at a certain point, to an extent, MEV is always going to exist. And so I think the question is almost like, you know, is there a fair distribution of MEV in your mind? Where, you know, which actors do you think sort of deserve some amount of MEV, and how do you actually go about achieving something like that?
I can try to volunteer on this one. I guess the way I think about MEV is kind of after you've accounted for everything, MEV is what remains. It's kind of this like weird thing at the edge of a protocol. And so I would say kind of fairness is a second order thing. It's much more important to minimize it. And kind of by the time you defined like what it is and what fairness is, you might as well fix it. And there's specific examples of that where the vast, at least like half of all MEVs like front running Uniswap, and even Flashbots, which kind of started on the idea of like making it fair. Right now, it's kind of this backdoor way of solving it, where you could now send transactions as privately on 85% hash rate, or you could do use background.me. And so kind of, if you can do kind of the 10x step and avoid front running, kind of why would you work on kind of redistributing it fairly? It doesn't super matter whether it like goes to like a kid doing the bot. It's kind of worse if it goes to a pool, but it's still fine.
I'd like to start maybe by saying what is a really unfair distribution or a bad distribution? And I think the situation and this I think goes kind of like against the idea of flashbots here, which is something kind of like I want to push against, is that the idea if we really optimize and maximize, so you have like searchers trying to get as much MEV as possible, and then they try to outbid one another, and almost all that value goes to the pools. and pools being competitive with one another would probably be forced to pass these revenues to their miners, right? So they'll keep just a tiny thing. And that goes back to the miners, making mining more competitive. Therefore, more miners join and we spend more electricity on mining. And so we took all that money, we passed it along, leaving very, very small crumbs along the way, and eventually paid it all to like electricity companies. So that would be an unfair way. So I think I'd kind of like want to point out that when thinking about fairness, it's not like, well, the user should have it. It's about like how much the miner should have. I think it's important maybe not to optimize it to a race to the bottom. Maybe try to think about it as, can we have some reasonable, like X goes to the miner, Y goes to the user, but not to make it an optimization race, which at the end of the day might be worse off, even if it's like economically optimized.
And you're essentially taking something that, you know, has some negative connotation to it, kind of spinning it and making it healthy and livable and help it make the system grow and distribute to, you know, various other people involved. And so the way that we like to look at the various parties, you know, there's users, there's keepers or searchers. You could even consider liquidity providers. There's DeFi products, and then there could even be a market maker, which could be like an automated user or automated liquidity provider. You know, trying to kind of make this MEV something more healthy and less unhealthy and distributed around makes a lot more sense, especially when you focus on the users who, you know, historically were kind of I guess, you know, abused and sandwiched and front run and tailgated, yet they receive zero of it. You know, it's a lot of times they're actually the ones who are responsible for making the profit opportunity, you know, to have existed in the first place by some action that they performed. Maybe it was a lending position, maybe it was a trade that they made, you know, and so if these, you know, as mentioned earlier, if these kind of like leftovers as a result of people interacting with these protocols, generating these MEVs opportunities, you may as well, you know, distribute them.
That's maybe a good segue to sort of the second question, which is, it seems like, you know, a year ago or 2 years ago, really the answer was sort of like, it's some sort of split between miners and bots and people sort of participating in PGA. And now everything that we're talking about is sort of shifting this MEV to DAOs or to individuals directly, sort of like with background me, for example. Which of these do you think is kind of more likely to prevail in the long run, or maybe in the next few years? Is it sort of, you know, individuals basically get to reap their own MEV? Maybe you could argue RFQ or like, is it something like that, or background is something like that, or like a DeFi saver or something like that? Or do you think it's going to be sort of more DAOified, where it's you know, liquidations and the ARBs go back into like some sort of pool on chain, and we all sort of benefit from it?
Yeah. Okay. So maybe to answer, you know, the first question first. So I think in my opinion, you know, like fairness in MEV is eventually the point where, you know, traders and users don't need to have, you know, some kind of specialized personal connections or business connections with the players, you know, in the ecosystem, for example, miners, etc., which eventually, you know, currently they must have some in order to become profitable, and eventually this just keep, you know, players out of the game. Very similar to how now you know you cannot be a serious algo traders if you have unfair benefits in, you know, centralized exchange arenas. So, you know, me as an average trader will not go into BitMEX because I have no, you know, fair chance there. So I think same should be applicable also for DeFi. And, you know, right now, if you have to have some connections with miners or have some specialized knowledge to use the flash loan bots, etc. So in my example, this is also some kind of unfairness in MEV.
Yeah, that's very, it's like, I guess that's sort of the Flashbots idea, right? Which is like, okay, we can do it, but like, you know, make it kind of auction and transparent, so like everyone gets access to it instead of, you know, having some special hookup with a miner.
And Tom, to your question, I think maybe me and Joey are kind of like on the two ends of the spectrum, kind of like between keeper and background. So I think, and I'm not sure me and Joey feel very like bad about it. I think both options are kind of okay, and both are livable with, right? You could do something like keeper, in which the platform itself has all these actors. So it's a DAO, it's a protocol or whatnot. And users can come into that knowing, oh, what are the pros and cons? And so maybe if they know what they're getting into, and if it's not competitive, they'll go somewhere else. And therefore, just like if Uniswap takes takes 0.3%, and that's fine. So maybe Keeper taking the MEV, and if that's comparable, then that's also fine. And so there's a question like that's one, I think, okay solution. On our end, we say, well, who mentioned it earlier? Was it Hasu? That I think so. That providing the order book is actually providing value. If I'm kind of like, if I have or the transaction stream, me as the user has the power. I can make this trade here or there. Like I could choose to do it on CeFi or DeFi or which protocol specifically. So I'm going to want a piece of the profit if you want my transactions. And so like the user will hold some of it. I assume a bunch of it will go to, again, whether searcher or miners or whatever, but definitely the user holding a significant piece. And I think maybe that kind of like defines a spectrum.
Yeah. So this wasn't intended to be sort of like which do you think is like right or which do you think is like ethical. It's more like which do you think is more likely. And I guess the other question is there a third option? Like I kind of see people on.
So I was going to just say,
go.
Since Uri and Joey offered kind of the two opposing options, I'm going to do a third one. And I think this is kind of like a more long-term hypothesis, but curious what you think. So if you think, okay, like who really owns MEV? It's like, is it kind of the anime avatars on Twitter? Like, do they own the information that the user is trading on Uniswap? The answer is, of course, no. They were just like the first to figure out you could extract value that way. And so now that there's a lot of anime avatars on Twitter, 90% of that goes to the miners in terms of fees. But if you ask, okay, do the miners own that? The answer is still no. The miners are entitled to be paid for block space, but not for like the full value of the transaction. If somebody is trading $1 billion, like they're not entitled to extract all of it. And like that's the core of the MEV crisis. But there's private transactions and so on. And so if you like really kind of unroll that game into the future and try to think like who actually owns the interactions, I think the answer is wallets, because there's nowhere up the stack to go. And kind of wallets are the ones that really do the user interaction. And so I think kind of the long-term outcome is kind of that value accruing to like MetaMask, or maybe Gnosis Safe, because it's like that's where the big transactions are, or like Fireblocks and so on. And by the way, like if you guys read Money Stuff by Matt Levine, which is fantastic, if you don't, like you totally should. He keeps saying that crypto rediscovers traditional finance kind of step by step and stumbles in like all the same places. And so I would say like maybe now is the time to rediscover like the Robinhood plus Citadel type sort of payment for order flow situation where there's like the wallet that owns the user and some Azure that sort of does the back running but not the front running, kind of like the way Background Me does that. And so I would hypothesize that to be the long-term equilibrium.
So that's a really good, interesting point. And so first of all, I'll say, don't say bad things about like Anima on Twitter. 0x2 would come for you. I'm not saying bad.
I love
him. Second, that's an interesting, like I love this thesis here. This is like, oh, you think it could go up to the wallets, and wallets would be happy about it because up until MetaMask started to make money, I think like a year ago or something like that, like there was a huge question of how wallets are actually going to kind of like monetize all their users, and it wasn't that easy for them. But then I'm not sure I agree if that's the last step. Like if you have MetaMask and MetaMask is making tons of money, in comes, I don't know, competitor number one and says, you know what, I'm going to give you exactly the same experience and I'm going to give you part of that. And so it goes back to, I think, the user. The user is standing on top of the wallet. Maybe the wallet will take a chunk. There's a question of like network effect and like how, which one would use what, but I'm not sure I agree with you that, well, it have to stop there. I would argue that a user can totally choose to use a different wallet if the wallet passes a big chunk of these values.
Both agree and disagree. So like, first off, definitely love the fact that there's a way to monetize wallets. They've been sort of sitting on, they've been doing useful things for years and years. But then second, I think kind of wallets are this like scary thing to replace with like your seed that could get stolen. So I think there's definitely kind of a baseline where if I'm getting paid like a cent, I'm just not going to do this. And then finally, kind of the other part of that equation is like once you're trading on 1inch on Uniswap, there's no backgrounds, and there should be no front runs in the first place. So like, I definitely agree with you that sort of MEV, like as a percentage of the ecosystem, tends down to 0. But like as the ecosystem explodes, wallets are still in a pretty good position to capture kind of a small percentage of it.
I guess
I
also
think
back to the
Go ahead.
comparison of individuals versus DAOs, I think that line is a little bit blurred too, because DAOs really are made up of individuals, and DAOs tend to cater towards the individual and kind of try to empower them as a group. And then even if you want to think about it from the searcher or the keeper's perspective, you know, you could have, you know, a keeper. I actually know someone, and I'm one, right, too, as well, who essentially would, you know, use this tool and that tool. You know, they may use Background Me, and they may use KeeperDAO, and they may also use Flashbots and anything else as well. So I think the line is a little bit blurry there. I don't necessarily think that, you know, just individuals or just DAOs or just some third option has to win.
Yeah, guys, let me add. I'm pretty sure everyone noticed what happened to Flashbots after Flashbots was launched. Some of the dApps started to exploit Flashbots to hide from Flashbot active users. So if you would, even like in 1inch, we have Flash transactions. It's not working with MetaMask, but would work with your ledger, because MetaMask will send it to mempool. It's not possible to prevent it. Yeah, but you can put your transaction into Flashbots, and it will be mined without disclosing it before it will be included into blockchain, or in case of reordering, reorganization, it could happen that it will be shared. But what I actually think that MEV belongs to users, and we need some kind of layer 1 protection, like blockchain layer protection from front running and from abusing users. Because right now, I believe that miners and all these arbitrage traders, they are like handling all these issues, but they're like trying to earn things which not belongs to them. And there are a number of projects who are working right now on general prevention of front running, but not back running for sure. I heard of Metro Labs and Stackware. So in the perfect world, we would see maybe VDF based solution to prevent front running. Back running is not that much a problem for user, because it usually happens because of inefficient trades. If a user shifts the market significantly, and this creates arbitrage opportunity, anyone can back run this transaction to earn this inequality on different prices. But
so as far as MEV belonging to users, and sort of you mentioned Flashbots as well. So like, do you think basically Flashbots plus 1inch solve MEV, or at least on the sort of, not the like liquidations, but at least on the sort of buying and selling side, like there's no front runs, there's no back runs?
No. I think actually it's abusing of Flashbots functionality. And next step, Flashbots should share these bundles with everyone who would like to listen. Like if any service would like to use Flashbots to just send transactions, Flashbots should share these bundles with anyone to allow anyone to replace these bundles, wrap these bundles, to do anything with these bundles. Because actually,
it is abusing. I agree, it is abusing, but it's a good thing, right? They've built this thing, and now you could use it sort of for the user. And as they transition to SGX, there would be a way to do this without even relying on honesty assumption. So like, it doesn't matter sort of how we ended up here, right? It seems like a solution.
I believe it will work only on short term. In next version, Flashbots would just share these pending bundles with everyone.
I hope not.
I wonder if Tina wants to opine on this. I don't know.
But I want to be contrary again for a second. There is a very big difference between front running and MEV, and we're all kind of like focusing. Well, back running is solvable. right? If you just like route it around to everybody, raise the entire market. And it's not entirely true because you'll raise the entire market. But what about CeFi, right? So you can do DeFi, CeFi, ARB, and you can't do that from within DeFi. So, but maybe, like unless you're moving giant chunks of money, I think maybe it's good enough. But MEV is about miner extractable value, right? If you're the miner, you're about to create a block, and all of a sudden, price crashes on Coinbase. You see that, and you're the miner, and you can put a transaction. You're not front running anybody. I think Sunny called it the blind front running or something like that. The idea of the miner has value, which it can capture because it organized a transaction. It's something which I think is inherent, and we're not going to solve that easily. So maybe we can solve front running, but I'm not sure that's the common thing. I'm not even sure it's the big thing. I'm not sure if you'll be thinking about DeFi, CeFi, ARB, whether that might not be a bigger opportunity than the front-running individual transactions of people on DeFi. I don't know, but I think so, or it's at least a possibility.
That, I mean, your note on sort of like CeFi, DeFi, ARB, and I think sort of like a lot of the complicated strategy that we're seeing now is maybe a good segue. I'm kind of curious, what you guys are seeing, maybe specifically Joey and Yvonne, as sort of like the frontier of the bot space. I think generalized front running, seeing some of these generalized front running bots operating the mempool was like, been pretty surprising to me, and I think a lot of other folks. But are you seeing like other novel technologies that people are employing, or like what do you sort of see as the end game for sort of bots in DeFi right now?
I can take a stab. So yeah, so far all the pending transactions have been public, and so my understanding is like most of generalized front running bots have essentially been copy bots. The idea is like, oh, can I send the same transaction but like from my address and make that money? And then it becomes like a cat and mouse game where it's like if you kind of invented a strategy yourself, you want to sort of complicate this so that people are not able to steal it, and then you sort of try to like decomplicate that and so on. I think Flashbots is a major change in that landscape because again, all the strategies you could submit privately, and so these like copy bots would no longer work at all, and I don't think they do anymore. Even right now, at 85% hash rate, there is just no point. And so I would say that now these generalized, or I don't even know if it's like the most money to make or whatever, but at least kind of the technological frontier and sort of the frontier of what's interesting would be the bots that just like take the new block and try to figure out, okay, like what the hell are like the new opportunities that came up in that block. And I think the first approximation to this is Mithril. If you guys have seen this tool, it's like a security analysis tool that just like magically transforms the VM into this like symbolic execution and tries to find pathways to make more money. And it already has like all the tooling for that. And I think the author, Bernard Miller, even built this into a tool that's called like a Scrooge McSteelface or something, where he like literally tries to like, do that thing and sort of extract the money. I looked into it. I haven't had such a great experience. If somebody manages to like use it even to like birth a CryptoKitty, send me an email, I'd be impressed. But there's definitely a lot to like work on. But Scrooge McEtherface. But yeah, right. I think kind of that's at least kind of the way to think about it. In a way, we built Deep Blue and AlphaGo. We may as well build something like this.
Yes, I see a lot of separate ecosystems forming and even coexisting. Similar to how, say, our oceans consist of unique marine life ecosystems all within the same planet. So we have a variety of strategies that, historically would thrive on public mempool. Nowadays we also have strategies that thrive using tools like Flashbots. But then there's also even more specific, like task-oriented automation projects, say like Numer AI or Gelato. These are maybe less related to MEV, but still very much related to botting. But then I say generalized front running does kind of seem to be an end game for some ecosystems, but then private mempool kind of changes the rules and economics. So, for example, we're building a keeper coordinator that essentially enables, users and keepers to kind of coordinate together. It prevents things like gas auction scrim triggers. So it's essentially a walled garden, right? But the idea here is you focus less on competition and front running and more on just efficiency. But in this type of environment, you really want to cater towards the coordinator's algorithm, right? So the algorithm is essentially designed to maintain a healthy ecosystem. So it's like, it changes the strategy, right? So, but again, back to, the separate ecosystems, I think you may ultimately see generalized front running kind of just solve certain ecosystems, but then private mempool is kind of totally separate. There could be, tools and technologies and skill sets from generalized front running applied to even private mempools, but at the same time, you're kind of more catering to whatever the coordinator is, whoever's setting the rules in that ecosystem and the walled garden.
Tom, we kind of like jumped question 3, which I really wanted to get like the people.
I do want to go to. I just thought we were talking about bots, so I kind of want to go into it. But yeah, if you guys are down, we can sort of jump to question 3 or question 4 now, I guess. Which is
good.
Basically about sort of the shift to proof of stake, which is you sort of rapidly approaching. I'm curious how you guys sort of view maybe the second order effects of the move to proof of stake with respect to MEV. What are some things that maybe we're not thinking about or not seeing right now?
So I thought of it a bit, and I have my own opinion, which seems to be, again, like not a lot of people think that way. And I would really like to like definitely Joey and Ivan and Yaron, I know you less of that, but really maybe get some pushback on this. But my perspective is that we saw that MEV was what, $700 million in the past 18 months or something like that. And we all talk, well, 700 million, that's tons of money. But then when I'm thinking about the move to POS, and it's kind of like I'm thinking, okay, we're going to have validators run by really large organizations. Coinbase is going to be a big validator, Binance is going to be a big validator, a bunch of others are going to run the validators. And when you think about the large stakeholders, okay, just think whether they are centralized or decentralized, okay? If ETH is worth $200 billion or so, and if DeFi tokens on top of it is another $50 billion, and Coinbase is another $50 billion, we're talking about a total value of businesses and tokens and economies on top of ETH, which are worth in the order of $500 billion. So $700 million per year is nothing. I would argue that those who are betting big on ETH and stuff built on ETH are better off running vanilla nodes, not capturing MEV, because the value it generates is larger than capturing MEV. If you think about the legal risk for Coinbase to doing these kind of things, instead of I just take guess, I run it, or not yet, because like Prism or whatever, and I really don't want to screw anybody over because the legal around it is a nightmare. I'm not going to risk it for my share of $700 million per year.
So Uri,
yeah.
You asked for pushback, and you're not going to get any from me. I think I agree 100%. And people, there's this phrase that cryptocurrency works better in practice than in theory. I think it's one of those cases where kind of honesty assumptions become even more believable as we transition to proof of stake. And so Anton worried that, what if, one of the Flashbots participants ends up kind of trying to screw the system. I think it's kind of even less likely in the proof of stake shift. And so you could just run Flashbots on like the Coinbase nodes, or back on me, or sort of any kind of private mempool, and that might just be the simplest end game.
But why do you expect, like regulation concerns or legal concerns where, these days regulated exchanges in the real world do give different priority classes, to different users?
Yeah, I think that is true. If it were, we were talking about something like a Uniswap or something, but this is like Coinbase, running,
you have like, NASDAQ exchange giving different priority classes to different players, right? So why Coinbase can't? I mean, I'm pretty sure that Coinbase centralized exchange, give different classes of service right now, right? I mean, so it's not really something that is unheard of, in the real traditional world, even in the regulated space.
I also think that you don't want to assume the value of MEV in the future just because it changes dramatically. One thing to keep in mind is that every time Ethereum scales, you get more users, more protocols, more products, more exchanges. And history shows that every time that happens, you're multiplying MEV opportunities, and which then further emphasizes the need to capture and distribute the MEV. But an example would be kind of thinking back to the days of the first few DEXs popping online and the first big MEV opportunities. It was great, and then all of a sudden the third and the fourth and the fifth came online. It was like lightning striking, and just kind of rejuvenated everything. The bots were going wild, and more bots were coming online, and everyone was reverse engineering other people's bots, and so it's like I could see, and then add in the fact that stake is fundamentally more liquid than hash power. So someone could very easily double down on their stake, but with mining hardware, you can't very easily do that, right? So if suddenly MEV just multiplies and multiplies and multiplies, and all of a sudden maybe you have people kind of doubling down on their stake and trying to grow their pool, maybe they are now incentivized to use that ability to just instantly increase their pool size, use that to somehow capture MEV with some of these tools that are available. That could be that could be very tempting for a lot of folks, even like a Coinbase.
So to your last point, you talk about hash power being less liquid, but there's a giant difference between mining pools who are capturing this value and miners. And so miners make what, $10 billion per year. So even for them, like, it's nice. 7% increase is nice, but it's not it's not that big. For mining pools who capture just 1% out of that, that's a whole lot of money. And so that's a bit of that. And to Yaron's point about well, Coinbase is already, and Nasdaq are giving like priority. I think there's a big difference between giving priority and co-location and like access to flow compared to accepting bundles of sandwiching, just from a legal perspective. Or I think there's a difference. Maybe I'm wrong, but I'm not sold on the fact that the value of MEV is great enough in order to push really, really, really big stake, like people who are betting billions of dollars on ETH and protocols on top of it.
But what if these tools, like say Flashbots or Mining DAO, have nice privacy features where all of this stuff is just kind of wrapped in, and they're just mining, they're just kind of running their software, and everything's built right in. They're not intentionally doing anything; it's just kind of happening.
It's a good question. I don't know the answer, but I'm not sold on that. The obvious answer is, of course, MEV is like as we see it right now will be in POS the same way. That's kind of like my point.
It's certainly going to change. Yep.
But always saying that MEV is only hundreds of millions, where ETH will be trillions, but ETH is trillions because there is some expectation that most of the future financial transactions will be on Ethereum, and then also MEV will be orders of magnitudes higher. So
I agree, but it's I think, and correct me if you think differently, I think that MEV is subtracting from the value of Ethereum. Okay, the fact that you can't just transact on Uniswap, but you have to do all sorts like, I have to make sure that you route my transaction for back running, and I have to use services to avoid front running and all these kind of things. And even then, if value is extracted, it's extracted from somebody. So my argument is that ETH would become more valuable and the protocols on top of it if MEV is mitigated, minimized, and not happening. So that's kind of like my argument, that they're betting more on ETH and the value there rather than benefiting from capturing MEV value. Does that make sense?
And what better time to talk about, fixing things when you're adding new features and adding upgrades, right? That perfect time to introduce something new to fix something is when you're, say, transitioning to ETH2 proof of stake.
I think Anton had a comment.
Let me add a little bit. Yeah, I agree that Ethereum will become more valuable with all these protocols working on top of it. But I believe also that miners, no matter proof of work or proof of stake, but yeah, let's talk about proof of work. They will never be properly aligned with the network, interest and inspiration. Because we also can see this on this old topic of block gas limit.
You want to talk about Eagle?
Let's not dive deep into it because it's a holy war, And I'm also not sure that right now Flashbots works not to hide that MEV is happening. But I believe if this would affect someone's reputation, then some system will appear that would allow to hide that this MEV is happening. It will not be like easy to prove that miner is doing this MEV. It will look like someone is front running someone. I'm not sure if miner is involved in this. Right now, flashbots were not trying to hide this, to like, you know what I mean. But if this would be, if this would affect reputation, they would find a technical solution to prevent tracking of miner. And also switching from proof of work to proof of stake, I believe that proof of work guys, they are not properly aligned, and I believe they will never be aligned with the interests of whole the ecosystem, because they don't care if this just transfers of either transfers of tokens or really complex DeFi transactions. But proof of stake guys, they are more likely to be aligned, but this is also a matter of network upgrades, because right now everyone is waiting like next hard fork and this Ethereum improvement proposal 1559. But there is also a case that miners will not like this improvement proposal and will upgrade to any other hard fork excluding this EEP, because right now they are forced to get this hard fork with all these Ethereum improvement proposals just because of this time bomb of proof of work. And at some point in future, they will be like able to exclude some Ethereum improvement proposals, possibly. And everyone in who are Ethereum developers, they will not be happy about it.
I think that's a fair question, or I think it's a fair point to end on. We have, I guess, one sort of point or question from YouTube. Lauren says MEV is going to be more pervasive in proof of stake, as selected validators will be able to reorder transactions over several blocks instead of one. I'm curious what you guys think about that.
Isn't it harder to reorder in proof of stake?
That would be my impression, but I don't know if there was something to it.
So it really, I don't see the logic in it being easy on like multiple blocks. It's going to be easier in terms you're going to be, your turn is in 3 blocks from now. So it does open an angle which isn't open right now. On the other hand, right now with proof of work and like the probability around it, if you're one of the top 3, you have like, well, 10% or so, like if you're right now Ethermine, right, with the change of hash power moving away from China, that's 25% of the hash power. So in 12.5% of the cases, they mine like 2 blocks consecutively. So I'm not sure it's going to be more pervasive there, that you're going to mine. Like, it's hard to say at this point how decentralized the validator landscape is going to be. Nobody knows, I think. But I'm not, and it's definitely opening an angle, but I'm not sure.
Yeah, reorgs are honestly pretty implausible, but now that Uri mentioned it, you could have like a multi-hop agreements, right? Because like if you not only know your turn, other people know their turn. So if you want to do like a 10-block censoring, you could have a service that's like opt-in, and once kind of people doing the next 10 blocks opted in, I think that could be an avenue for MEV.
No, you can pretend to be multiple, right? You're running 10 different validators. Sometimes, like, they will be consecutive. You'll know it coming ahead of time. So there is
that much is the same as mining, right? It's like, okay, you run a bunch of them, but the probability that like you'll be stacked, like all of your validators are going to get stacked, is very low. On the flip side, if you can sort of scour the whole world for people who like also want to opt in and find the next guy after you and then the next, like that could be an attack.
That's not a happy thought.
Well, we're not here to think happy thoughts.
Guys, sorry, I came up to idea. It's related to what you was just discussing. let's imagine that MEV appeared with 1 billion of US dollars. How many network reorganizations we would see in next 24 hours? It's possible that every miner would try to remine this block.
And that's why MEV is dangerous, right? Like originally I wasn't in favor of MEV, but like that's definitely one of the top 2 reasons for something like Flashbots. The other being Flashbots did an amazing job removing the whole gas bidding, like where I am in the block, and now we're all enjoying really low fees because of it. So
yeah, but actually reordering is one thing that is solved by proof of stake, right?
True. Good point.
And Anton, like more on your example, I think if you like actually think through this, I'm not sure if it's that bad, right? If there's like at least a few honest miners, it's like they mine on top of like one of the blocks just by being naive, and then you have like a bit of an advantage, and then the others are at a disadvantage. So that's one defense. And then the second defense, if literally everyone is remining, I think you sort of, the miners quickly realize that, you know, I'm not winning this, no one's winning this. And then they could do a thing where they sort of shift the MEV onto future blocks that are like, hey, I'm gonna like take like, let's say like 30% of this, and then 70% goes to like, you know, the people who mine after me. And then that 70% is also split. It's like, okay, I'll mine on top of you, I'll take the 30%, you get the rest. And then it's kind of this exponential decay.
You thought about it a lot.
That's why I'm on this panel.
But
Yeah, that's why we got all the killers.
Should this be also implemented inside Node, this kind of logic, and also tested?
I want to say proof of stake kind of I think proof of stake kind of like solves it anyway, because people are not going to be reminding this. And I think Flashbots were also thinking about this. Like a while ago, they had the idea that there was then scuttled to like route everything through a smart contract. And part of the things you could build there is kind of you like programmatically enforce in a smart contract that, you know, you like stake something or like give something to the future. And I think kind of another way that came out in practice was when Binance got hacked for 50 million, and people were also debating, it's like, oh, but like, what if they sort of, instead of just taking the loss, they essentially like offer the private key as like a bribe to the miners, but then the miners would fight, but then they would like pay a little bit to the next blocks. And so kind of that debate came up, and kind of people thought of that solution, and I guess it's doable, in theory at least.
I think that's a happy thought to end on, the $1 billion MEV. Thanks everyone for joining. This was a really great panel, really great team. And yeah, I guess we'll see everyone on Twitter.